All right, Chad, I got another watch list for you, but we have to talk about today and what it really means. It was absolutely crazy. Some would say it was scary, but I really want you to understand this concept right off the bat. Today was the worst day for the Dow Jones since June of 2020, and for the NASDAQ, we closed down 5.16%. That was the worst day for the NASDAQ since March 2020. Why is this wild? What does this have to do with? Again, we're going to go over the CPI. We're going to talk about all of this, but why you need to understand this is think about it. These are some of the worst days since the pandemic. The only difference is we do not have the whole entire economy locked down, and we do not know what is going on. So, Chad, it was wild. There's a lot of questions. The market reaction was absolutely crazy. Honestly, I got to add this one here too. I want you to see this. I got this from ZH. If you know, you know. But on top of all of the craziness today, you literally saw the biggest jump in rate hike expectations on the Fed futures ever in history. And then what do you notice? The downside, the rate cut expectations, they also came up too with it. Pretty much what you saw happen today, there was a huge move on the Fed futures, and this is going to have to do with everything, but literally what the bonds are showing and people's long-term views of Powell following the CPI report, it was absolutely insane. And the fact is now, it is just showing how everybody was kind of positioned very not prepared for this, more or less. So we got a lot to talk about. Obviously, we're going to talk about the CPI. If you were watching yesterday, the worst thing that could have happened that we brought up, it did in fact happen. The core did shoot up by double what was expected in headline. It did not come down on the month-or-month. Literally, what we were talking about month-or-month, it just didn't happen, bro. And the market gave back almost pretty much all of the rally that we've gone over for the last few days. Let me throw one more at you. There was one more thing. Remember on the watch list, we brought up Mr. Timmerhouse, and he was the guy last week who secured the 75 on the Fed futures. He even came out today, and he was saying the Fed is going to raise by at least 75, saying that 100 basis points is on the table. Again, I'm throwing all of this at you. I want you to understand there was a lot of things that changed from after the report. It was unequivocally bad. Everybody took a loss. We talked about that today. Again, we had some cool plays, but what I mean is that Wall Street was wrong, Powell was wrong, and even the Biden and White House administration, it is not looking good for them. Again, this caught everybody off guard, and even coming into tomorrow now, all eyes are going to be on China, more data, and on top of it, you're going to be getting UK and Germany CPI and all of that. So let's see what happens. But I got the plays for you. I got the keys. So Chad, I hope you're ready, and hopefully we see you on stream, baby. YouTube.com/thestockmarket. We have literally documented every single day live from open to close, and during these times, you're going to want to be there. It's free. All we ask is that you are positive, my friend. So hopefully we see you there. And Chad, we have so much to talk about. Let's go. Run it, baby.
Working to the couch, it's the 2020 legs. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson. I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
So right off the bat, Chad, starting with the keys, again, the whole reaction today was because CPI came in hotter than expected. Hotter on the headline and way hotter on the core, and this caused a lot of stuff. But why today was bad? Remember, again, I was confident that it was going to come down. Today was supposed to give us some evidence of inflation peaking, but it only brought evidence of stagflation, or that the Fed is going to be a lot more aggressive. Again, that's what the Fed futures are about, and that is what we need to be monitoring. Again, it is very important because everybody's changing, and just don't forget, you have Powell next week, so there will be a follow-up. This is just the first step, which is kind of scary to think about, but overall, what happened today, we should have had evidence of good. It should have led us into more bullish than not than Powell. Powell, but what could have went wrong absolutely went wrong. And if I could show you all the data and show you everything else, but I only have to show you one chart, and it is this one right here. If you've been watching, we've brought this up many times. We've brought up, again, a bunch of other things. Yeah, I'm sure you probably know about the diffusion index. I brought this up showing you how over 70% of the categories of the CPI are still above 4%. But let's go back to this chart. This is what explains everything, and it is showing you that core services and core inflation is going up, and it is above 6%, even if you exclude rent and real estate. Why is this the only evidence you need? Because this is core. That means it is already excluding food and energy. So now, if you exclude real estate and rent, I'm telling literally, we said if you are a stuffed animal and didn't drive a car or eat any food, yeah, you didn't experience inflation. Now this is assuming you don't even live in a house or pay to live anywhere, and that number is hitting right below a new high or about to go and pretty much showing no signs of stopping or peaking, and that is the sticky nature of inflation. So that's the only evidence. Again, there's a lot more. I'm just trying to simplify it, but coming into the second key, like we said, the real problem here is core, and now with evidence that inflation is a little bit more sticky, this is why we saw the Fed futures or Fed rate cuts. For rate cuts by the end of the year, they literally jumped the most in history. Again, coming into the midterms and how we've already sold off, not too many people were expecting this. So the fact that it happened, and like we said, the fact that the month-over-month headline came down, it just made everything worse. What could have gone wrong did go wrong. So that's kind of the quick rundown beyond just the 5%. I don't know if you saw the chart, bro. It's hideous. But coming into the third key, we kept bringing this up, and you need to pay attention to it, man. The Fed futures, that will be the key leading into next week. It's one thing how we end this week, and that is something we got to watch. And now the data, PPI tomorrow, UK stuff, all of that, we're watching to see if it moves Fed futures. Then the Fed futures, that's the bonds. If the bonds move, how does the dollar move? Dollar affects everybody in the world and even commodities. So again, you could kind of understand it's going to be connected, and we need to see where we go by this week. But even though there's going to be a lot to watch, all that is really going to matter from here now is Powell to drive this home. Like I showed you with the bond divergence, again, I told you every time TLT has been hitting a new low this year, the market has hit a new low with it. But as you see, we're a little bit above that now, and really how I'm feeling, I don't think we are going to hit new lows, or we'll be like right there, but we're going to need Powell's blessing with the CPI. And really now with everybody, again, this argument about 100 basis points, best part is you've already witnessed it. You've seen the market freak out when we priced 100 basis points, then calm down and then be excited about 75. But I just want you to understand this is going to be the big drama. And now with 100 basis points, I just want you to understand this. I used to think this was crazy. After today's data, it kind of seems more justified. But if we watch this back to back and you watch the Fed go from 50 to locking in 75, and then right before the meeting go to 100, I think this would lead to a major sell-off. Pretty much, I would take this as the Fed kind of panicking now, because again, coming into end of the year and midterms, everybody was expecting them to cool off by now, and now it's looking like it's about to speed up. So keep that in mind. But if we don't get 100 basis points, well, I just think it's going to be better than a major sell-off. I don't know. Again, last time we went up on it. We'll see how the market takes it, but it really just depends on everything else and where we go with the data, the ranges, and then if other things like commodities or all of that start to come up, that will give the story. So pretty much for tomorrow, it could be very ugly. Watch those ranges. Again, 3,900, that is the key level. Then it takes you right back down to like the 385, 387, then 383, and that's what we're going to be looking for. But watch the data, see if the Fed futures go up, and really, you just got to be watching for the 100 basis point debate this week. And then if commodities make another run, keep that on the back burner. But if anything, that should be the driver, and depending on where we end this week, it's going to set us up with Powell, and Powell Powell is going to drive home, yeah, we're about to start this next quarter on a really bumpy start, or we might kind of chill out. But again, going back to the beginning of the video, I'm just telling you right now, the market shouldn't have moved like this. And the fact that we are moving at the same rate to the whole entire world being locked down, I mean, it's kind of saying that maybe we got something going on, and maybe it is this idea that everybody thought after midterms. Even go look at our old videos where we were starting to talk about how 50-25 could get you there, but everybody thought they were going to slow down and slow things down into the end of the year, and really, that is just not what we're getting. So I hope you're ready, but let us get into the plays. So right off the bat, I got 3 different plays. We made a couple, and again, even though I was saying that we kind of could have got the bullish CPI yesterday, just remember all of those early shorts, I did not panic out of them, and I held them. And like I said, no matter what, even if yesterday was bullish, I was expecting for the follow-up with Powell. That's where I had my flexibility, but today it ended up coming down. We added a couple plays. Here are the plays that I'm holding. I cut out of the AMAT. We got a $200 profit on that today. I have the ARC. That one's down, but again, with how UNG moved at the end of the day, still kind of down with that. The Dash went negative. Remember, that was my only upside. The IYTs pretty much came back to life. We're only down 30 bucks on that now. The SMMT kind of came back. I got $300 back from my Tesla play. The UNGs came up, still down 1,300 on Yash, and then it's not showing AMD. I believe we were up like 200 or 300 bucks on that. That one went from negative to positive pretty much now. Out of most of the plays we were down on, it's really only the Tesla that's kind of hurting me there, and then IYT with the rail strikes, all of that, I think it should be able to come back. But there was that. I'll go over the other plays that I made, but pretty much I want you to see how shares flexibility, but even with what we were expecting, I just want you to understand all of my plays were based off of this week causing a move, but not being solidified until Powell. And that's why we were able to turn some downside plays. You see how they came up, and literally that's exactly what happened about, what, 2 weeks ago. So I want you to keep that in mind. But as far as the first play, baby, Yang. So in the midst of everything that happened today, there was some weird Taiwan news that apparently Taiwan is lobbying the EU to get them to put sanctions on China. So that slipped in. China was already down. Again, the Yang was already up 10%, but even with it up 10%, I just overall like the risk to reward on this if you are trading small. Pretty much, I grabbed 50 shares of Yang, and I grabbed it at, what, 16.78, but with 50 shares, even if it was up 10%, if it dropped that 10%, came down $1, and, you know, literally unwound all of today, I would only be down $100. Even if it came down to 11, I would be down like 300 bucks. Again, other plays, that could be a lot more, but take a look to the upside on Yang. If anything popped off, again, the China won, and like we're saying, watch Asia after today's move. There's just a lot of upside comparatively to the downside. So I feel like if the shares are small, way more upside if things pop off, and then even if it does go down, it shouldn't be one of these plays that should clean you out. But be careful. Obviously, not a recommendation, but this one, playing the news and the risk to reward, I just liked it going small. So that is the first play. Coming into play number 2, I actually made an option trade on this one, but Coinbase, and the reason why I grabbed puts for October, I grabbed the $35 put, 5 of them for 30 cents, about $150, but the reason why I'm playing it is for the off chance. I'm not saying this has to happen again. I bought Ethereum at $8. I'm on your team, dog. I still got some at 8. Stop playing with me, man. But I'm playing this off chance that the ETH merge in the next couple of days, it either causes problems to Ethereum or at the very least for Coinbase. But like I'm saying, this doesn't have to happen, but $150 insurance, I don't think it's going to hurt. I have to go with it. So that's why I decided I went for the option. I would have went short, but again, coin can move a lot and do some crazy things. So I said I'll hesitate on that and then just go with the 150. Give me some time leading into October, and then we could go from there. But that is play number 2. And then finally, number 3, bro, I don't want to even bring this up. I'm telling you, considering all the volatility, everything we talked about, like I said, you better have big balls for this trade. We've been going over it, but like last thing I want to do is bring it up again, but UNG and oil, man. And literally, I really hope you understand how we're viewing it. I hope you understand the risks, the volatility. Again, I think it's an opportunity. I think you could focus on it, but dude, the uncertainty level is unreal. But now, Now, this was the cherry on top of today. Literally, it was already bad, but the fact that natural gas closed green and started running up into that, that is the worst case scenario. Literally, last thing you want is evidence that inflation isn't coming down, gas prices dropping for 3 months, and then as we're seeing that nothing is changing in inflation, commodities start going back up again. Literally, today was a 5% sell-off on the NASDAQ. How many days have you seen the market sell off and everything comes up with it? So for something to end green and not sell off, that really stands out. But considering its nature, that is the bad part. But now, just keep your eyes out for this and watch if it takes off again. I have to factor this into the analysis, but the White House today, they said again that they want to fill up the SPR and buy back in at 80, but essentially, man, they are low-key putting in a price floor now on oil. So if that is true and they follow through with it, this might help some of the volatility with oil, because now if we know the government is going to have to refill half of their reserves and they're saying $80, literally, it's not a price cap, it's a price floor. That's where this all gets crazy. So those are the main plays. As far as everything else, like I said, we went over what we're holding. I covered the AMAT. I got $200 net profit on that, opened up the Yang, got the coin, and then right in the morning, I shorted a mini future, 4046. I covered at 4006. I would have made like another 300 bucks, but got to realize 200 bucks, not too bad. And again, a lot of the plays that we were down on, those all came back to life. And now we got a lot of stuff working there. Again, just don't forget YCS and some of those others. And honestly, I got to bring this play up, man. Comment below if you took this play. This one's crazy, man. This was the free SPY butterfly. Literally, my cost is 0. This thing is up right now. And again, in the next month, it's going to be wild. But we have that, the YCS, the EWG, the EPV. Again, some of these more swings and not day trades still have them. So we're going to see how this plays out. Still riding, but that was it. As far as tomorrow, I'm going to be playing everything I told you about, watching the China, watching gas, oil, a little bit of the crypto. And then if any of the other stuff, I'm still riding the AMD. I'm going to just be looking for tech or any other early signals. And again, IYT, FedEx, UPS, any of the travel or rail stocks, just keep your eyes out for that, because that could be another big effect. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, you're in control. Chad, I'm telling you, you are in control. If you control the pressure, you could play this game at your own pace. It's crazy that today was one of the worst days since 2020, because like I'm saying, you could build up cash. You could ride it out. You could be flexible with the shares. You don't have to average down on anything. You could, if you understand the steps, Chad, you are in control. The only thing that will take you out of it is if you let the pressure get to you, baby. So let's go. You're in the game. You're in the right place. I really hope you're excited for tomorrow, man. You're living through history, but Chad, you're living through it so you can make it. Let's go, baby. Oh, yes, it's game time, Chad. So I love you. Have a wonderful day. I'll see you in the morning, and God bless the Chad, and thank you guys again for being positive, bro. I'm telling you, amen, baby. Amen. That's what we talking about. Oh, and you remember this? I wore this, bro. This is like 2019, Josh. I don't know. I was feeling it. I don't know why. I didn't know what to wear, and I feel like something's lurking. I feel like there's like a tiger. Is that a weird tiger walk that I do? I feel like that's how a tiger's supposed to walk. That's why it's like, why is the market down 5% when everything is not shut down? You know what I'm saying? But it's lurking, baby. I'm still doing this. I know. Okay, okay, bye.